Hello again. As 2020 nears an end, what more can I say? It has been a wild ride, and baby, it's COVID outside.
Okay, maybe I'll stay. 'Cause baby, there's COVID outside. I'll sit 6 feet away. Baby, there's COVID outside.
While COVID has been the biggest ongoing story of the year, and the global pandemic has impacted everyone, there are many other related stories too. Interest rates of all sorts have been all over the map this year. I am sure that most of you will remember that in March, the Bank of Canada took the unprecedented step of 3 quick 0.5% rate drops to the overnight rate, which serves as the basis to the retail prime rate. This saw those in variable rate mortgages find their rates drop to below 2% for the first time since the subprime mortgage collapse and global recession of over a decade ago. But it wasn't all rosy for mortgage rates. In February, you could get a variable rate mortgage a full percent below prime, but new variable rate mortgages no longer got that discount, which meant that variable rates weren't nearly as attractive as those held by people who already had them. Further, as the risk of mortgage default increased due to mass layoffs in March and April, we actually saw new fixed rates increase for a few months. They went from about 2.5% to about 3%. But then the federal government responded with massive stimulus to the market, which provided low-cost liquidity. And as financial markets and investors grew more comfortable with the new normal and some people started to return to work, we've now seen that interest rates have dropped to levels never seen before. Before the pandemic, we had never seen fixed mortgage rates in Canada break that 2% barrier. But it happened a few months ago. Currently, most mortgages in the market are found between 1.5% and 1.99%. On December 9th, the Bank of Canada made its 10th interest rate announcement of the year. Normally, there are only 8 or 9 such announcements in any given year. After dropping its overnight rate 3 times in March, the bank has held the line on rates since then, but continues its massive quantitative easing program to support market liquidity. Quantitative easing is a fancy term for the Bank of Canada buying financial assets, like mortgage bonds, which keeps money available at low rates when other investors are less inclined to invest. This keeps money in the market. As a result of the bank's moves, borrowing costs for new mortgages will be very low going into the new year and likely well into 2021. According to the Bank of Canada, economic momentum heading into the end of this year is higher than had been expected even just back in October. However, with record high cases of COVID-19 in many parts of Canada, we're seeing new restrictions, and the Bank of Canada does expect that that will dampen growth in the first quarter of 2021 and contribute to a choppy trajectory until a vaccine's widely available. The bank's governing council acknowledged that Canada's economic recovery is going to require extraordinary monetary support, and that we can really expect to see rates remain the same or nearly the same for quite some time. In October, the bank suggested that the normal target inflation rate of 2% likely won't be achieved until 2023. Now, they gave no further clarification this time. But what does that mean to you? Well, if you're in the market for a mortgage in the next 6 to 12 months, you can expect a very low rate. And I expect we'll see both fixed and variable rates stay under 2% at least until the middle of 2021. If you're considering buying a home with today's rates, we are seeing that most of your monthly payment is going toward paying down the principal balance of the mortgage. This has never happened before. So if you're in a solid financial position, there really hasn't been a better time to get into the market that I've ever seen. If you're wondering what this can mean to you, either as a mortgage renewal or a mortgage refinance, or to purchase a home, please reach out to me. I'm happy to assist you and help you figure out your best solution and design a roadmap to your success. As always, my commitment to you remains the same, and that is to give you the best advice that I can, and to help you to get the best mortgage that will help you to achieve your personal and financial goals.